Hi and welcome to the Market Alert for Friday, the 28th of August 2020. So Powell, Pelosi and Pentagon pummel big tech, bonds and bullion. Yes, first day of the Jackson Hole Symposium and of course Powell talking about getting inflation up so that they can try and obviously inflate away some of the debt. Which created a lot of volatility in the markets yesterday. Pelosi wanting another stimulus package of around $3 trillion. She's not letting go of that. Trump doesn't want to do it. She wants it. And it's just, well, it's like I say, the whole thing's a mess. But we know that. But it's great for us because the volatility is returning to the markets. And yesterday, even when the markets kicked off, we saw the selling coming into the market. We see prices trading down to the BRN. We see the increase in volume here, closed below the 200 MA and through the entry point there. The selling is still there, but then all of a sudden you will see the buying come into the market, and you can see already that the volume is greater than the previous bar. The pros are buying the market, and if I just move this forward a bit, you will see that they take profits, and then the market goes down to the DP, and that's where the party ends. As you see, prices reverse very quickly back to the scalp, and I'd already jumped ship at this point because you know that they're going to buy back at this area and bring the market back. And then prices trade sideways. We still have selling, but there's a battle going on, as you can see in the volume. And then we have another one where the market is bought at this level. And again, this volume bar now is greater than this one. So again, as the bars unfold, you can read what the market is doing on a bar by bar basis, and then the market's free to come back as the selling disappears. Prices trade up to the 200 bar moving averages. Like I say, the DP and the 200 MA are like magnets, and the prices are drawn between both of these, and when they get to one, they're thrown back or they move away, but then they eventually are drawn back. So now you see prices come back down around 89% of the move from here to here, back to the DP level, and then prices touch the DP once more, and the volume is dropping off. There's nobody wanting to sell through this at this point, and prices are then free to move back to the upside there, which you'll see in just a moment. We then get a potential buy signal. We've got the DP to get through, the BRN, the big round number, and also the 200 MA in order to move higher. But as the market isn't selling off, there's a pretty good chance that this can happen. We get some not profit taking, we get some resistance here because we saw selling here, and also this is selling pressure because the volume in this bar is greater than the previous bar, but the range of the bar is less, and also you've got that 200 MA just sitting above it. Does it mean to say the market can't get through? No, absolutely not. Does it mean the high volume that prices will sell off? Well, not if it doesn't close below the 5 bar moving average. So prices drive through to the scalp, and if I just move back just a bit, just wind back, you'll see prices continuing to move higher there. And then notice the volume building here. Market's making no progress, so there's profit taking coming into the market at this level, and then prices close back below the 5 bar moving average and exit the trade. Prices then move lower. They close back below the BRN and the 200 bar moving average and put in another sell signal. Now the problem here, of course, we've got the DP in the way, and we've got the BRN down here just past the first profit target scalp, and then you see some buying coming into the market. Prices get down to the entry point, but don't fill right down by the BRN. Prices go through, and notice the spike up in volume here as well, and also very important, prices coming off the low of this price bar. So again, at the DP level, the pros are buying back, and there you'll see once again prices then trade sideways and start to move back to the upside. We then have a potential buy signal. Prices pull back, eventually it times out, and again another potential sell signal. Again, sitting at the DP level, again you'll see, even though it's subtle, a spike up in the volume there. Prices coming off the low, and then eventually the market ends its morning session again with support at the DP level. Right, let's move on to the afternoon, and in the pre-market we had to the afternoon session we had the US claims, jobless claims, and if we just have a quick look at this, you'll see it's now running at around 1 million per week, from the highs of 10 million job losses. And I've said before, by the time we get to Christmas, we'll be up to 60 million. I must total this up. We're well over halfway, which is, as I've said before, is tragic. So this was released, and then of course Powell started to speak from the Jackson Hole Symposium, and this created volatility in the market. You can see again the market sitting at the 200 MA and the DP, but as soon as the market shook out to the downside, they bought back here, and you can see moving the market higher until we get to the open of the session. You can see the selling coming in, profit taking, quick profit on the upside from the pros there, and then cash market opens in New York, and we see the selling coming in through the through the DP and the 200 MA, and then trying to find support at the price bar to the left there. And again, you can see this happening here, and prices bounce back from this level. We're stuck at the 200 MA and the DP. We've got that resistance there. This signal is cancelled as the stop is hit before it's actually filled, and then we have a sell signal here. Now we've got support here, which we can see from the green inside of the red, and immediately prices come back. As soon as they get down to the low here, which is tying in with the scalp first profit target, that they are immediately brought back to the upside there. So it's have to be very quick to get a profit on that one. In fact, I took a small loss because of the speed it came back. Opening part of the session, as I've said before, if you get profits in the first few bars, it's best to get to break even or take those off the table. Prices came back to the 200 MA, and interestingly enough, you'll see that again the close of this bar is off the highs below the 200 MA and the DP, and the volume is still high. So the market's struggling to move higher here, but we then get a potential buy signal. Again, the market comes back below the DP and the 200 MA. So if you look at this price bar here, you will see that there's a lot of volume, more or less the same as the previous bar, and it made no progress through the DP level. So again, a bit of a clue there. When you've got 90% of volume, the same as the previous bar, narrow in range, prices are struggling there. Just having a look, see what the news was, and it was pending home sales. And let's just fast forward. Market started to trade sideways, and the pending home sales came out higher than forecast at 5.9, but this wasn't enough to move the market to the upside. It started to trade sideways, trapped between the DP and the 200 MA there, as you can see. Again, like I say, the power of these levels is quite something. So prices then succumb to the downside, and I've marked up here the 13,130 because of what happened here, just to see if the market would break. And on this occasion, prices broke and then traded down to the BRN, where we see again the pros taking the profits at the big round number there. So let's fast forward. Prices bounce off this area, no surprise, and staying above the 5-bar moving average there, and then into a bit of a sideways move. We got some selling there again at the 200 and the BRN, a further potential weakness, and prices just became sideways and then drifted lower again. You see them buying back, and then we had a potential buy signal just before we ended the session, and the market wasn't really moving that much. Traded up to the scalp and then traded sideways, managing to close back above the 5 bar, but it wasn't going anywhere. The volume was dropping off, and it was after 4 p.m. So exit the trade, and then prices drifted lower. Okay, let's have a look at the overnight. Let's start off with the daily chart. We can see that the DAX is in a bit of a sideways range, but the volatility is nice, and it's picking up overnight, which you'll see in just a moment. Sort of trapped here as well. It needs to either break to the upside or to break to the downside, one way or the other. Look at the 2-minute chart. Just before I started to record, the DAX was fairly quiet, but as you can see on the chart there, we had some volatility come into the market. So let's go to the start of the session on the overnight. The say price is fairly quiet, coming off the 200 bar moving average, managing to get through the DP, and then it became a resistance for a while. Eventually it broke through, and again you can see how it requires volume in order to do this. Prices have traded up towards the R1, and then all of a sudden I'll just change this. No, I won't. While we're here, let's have a look. See, we've got the high up here and the low there. Because of the trading range that we've got in the daily chart, this is easy to see from yesterday, the high and the low. And so analysis is very simple. If the market stays above the 200 bar and the DP, a run up to the high is an out of order, and vice versa. If we break through the 200 and the DP, then down to the close. So we can see the bigger picture. But notice how the shakeout at this level, down to the 200 bar, down to the DP, just as we saw at the start of yesterday's trading session, how they buy back in at this level. Very important. Back through the 200 and then up to the 20 bar there, and prices then sideways. So I don't know what the news was. There's nothing reported that I can find at the moment, but a bit of a shakeout going on there early this morning. Meanwhile, the US dollar yesterday, volatile day, as Powell was speaking. Powell is speaking again today. Just a reminder that on news-wise, we've got Bailey speaking at 5 minutes past 2, along with the Fed chair at 5:05 as well. Sorry, 5:15. Just a roundup of yesterday. There's other news in between as well, but they're the big ones for today. But the US dollar yesterday was moving down sharply as the precious metals moved up sharply as well, but then were monkey hammered back down. The reason for that as well is that it was the first first notice day for delivery of physical silver, which is in short supply for yesterday, which we'll look at in just a moment. So on the Dow front, let's have a quick look at this. The weekly chart, you can see that we're through the 89%, which we were heading for yesterday, back to the all-time high, which is not out of the question today. That's more than possible for these markets to do this, but I suspect not. And then we head into the weekend. It's bank holiday here. It's Labor Day Monday in the US on Monday, and I won't be here. I'm going to have take advantage of the last break before we have the run up to Christmas. So everything resumes on Tuesday morning. So in the Dow, you can see where the bigger picture is. And then finally in the metals market, you can see we're sideways to higher. Still not had the chance to pick up anything at $26 an ounce. So I've still got this other position plus all of these others in this trade at the moment. And like I say, I was hoping to pick up one. There still is a possibility later today, but the market's certainly finding support at that 20 bar moving average and has done all the way through. So if not, then I'll just wait for another pullback, but we're certainly heading in this direction. as the US dollar weakens and once Powell's finished speaking, no doubt that's what will be the case. But during yesterday's session, let's look at the 60-minute chart. You can see the silver price took off because of the so-called inflation agenda that the Fed has. The market hit this level here of $27.96, nearly got up to the $28, and then was just absolutely hammered all the way back down to $26.50, which would have been another area, because it's not doesn't seem to want to get down to the 26 there. So there you go. That's a lot to take in for today. But yeah, there's a lot going on at the moment, and the volatility is really going to pick up from next week, which I can't wait for. It's going to be brilliant. And just before we conclude, let's have a quick look at the volatility. This increasing significantly. Let me just zoom in there. You can see that we're above the 20-bar moving average now. This is indicating that we could see potential move to the downside once the markets hit those all-time highs. And also in the color-coded version, you'll see that we have an amber there in the implied volatility. And I'm just trying to show you this, that when we go from the green to the amber, you can see the correction in prices there. And then once prices settle, they start to move higher. The implied volatility goes back to green. But at the moment, we've got a bit of a spike through here, and that means that we're going to have a potential correction in this market, but probably not until we get back to the all-time highs, and then we will get that much-needed correction in prices. Okay, that will do it for this one. Have a great bank holiday weekend. Everything resumes on Tuesday morning. And with that, as ever, thanks for watching. See you in the next one.